Hello there and welcome back to the channel. Are you perhaps thinking of starting a journey in investing but are afraid of the so many mistakes that lay out there and that has cost a lot of people lots and lots of money? You are not alone in this. Stay tuned in this video because I'm going to reveal the 5 most common mistakes that are made by new investors and some of the tips that you can use to solve this. It's true that a lot of investors fail, especially in their first attempts to venture into investment, whether you'll be doing it part-time or full-time. It's worth noting that there are a lot of mistakes that investors make, and in this video we are going to make sure that we deal with those and give you some of the tips to help you along in this investment journey. This is Friday Money Matters. This Friday and every Friday on this channel, results-oriented preparation, where early preparation equals excellent results. Remember, every Friday we're giving money and financial advice to help you, because it is our firm belief that financial knowledge and every other knowledge that leads to money and how to handle it will go a long way to make stable and more focused, successful communities. The first mistake that new investors make is neglecting to do research. Now, a lot of people go because they say, I'm investing because of gut feel or something that they heard from someone. Therefore, they don't see the need for research when they invest. This means that you're buying something that you do not understand, and in doing so, your ignorance can actually lead to a lot of mistakes that you make along the way. So as a result, losses are prone, and as such, people find themselves losing their life savings and so forth. So it is important, therefore, that you do research for each and every asset class that you want to be involved in. Therefore, as a rule of thumb, never go into something that you are not well versed with. Make sure that you've got in-depth knowledge of an asset class before investing in it. Number 2 is chasing hot stocks. Now, a lot of investors always get excited by trending stocks, trending investments. It's on the news, it's everywhere. Everybody's jumping on it. And then you also get on that same boat. Now, the problem with this is that if you are doing so, you might be entering at the wrong time. Entering at the wrong time means basically maybe the market is about to turn as far as that particular asset is concerned. So people find themselves going into an investment quite high when the market is about to turn, and now whether it was on a bullish run, that bullish run has come to an end, and when it turns, it wipes your account away. So that becomes one of the major losses, and this is always linked to doing research. Always, to avoid this mistake, make sure that your research is founded on facts and also on past occurrences in the market, because usually the market has got a tendency of repeating itself. Knowing what it has done before and getting the information that is current will go a long way to help you make the right investment decision. The third one is lack of diversification. Now, this basically means that you're putting all your eggs in one basket. For instance, maybe you're investing only in stocks, or you're investing only in Forex. Now, what happens then is, if that particular asset class is going through a bad space, or there are times when things are not working well as far as that particular stock or whatever the asset you're trading, if things are not going well there, it means that there is no money coming in for you, or you are making consistent losses. So the tip to avoid this is to make sure that you diversify across different asset classes. This means that you can use one to leverage whatever losses you would have made somewhere else. This helps you keep afloat, and it keeps your investment portfolio healthy. The fourth one is emotional investment. In emotional investment, you find people, for example, doing what is called, it's ridiculous though, what is called revenge trading. For instance, let's say you enter a trade, let's say you are trading, for instance, a forex. You enter a trade, the euro against the dollar, and then somehow the market went against you. Now, in your mind, you're thinking you want to recover what you've just lost. So you enter immediately another trade. So you are using emotions. Remember, the trading game, as I've said before, no emotions are allowed in trading. Trading is a technical exercise. No, absolutely no emotions should ever be put in that particular exercise. So it means therefore that you are using emotions because you do not have a sound plan. Having a sound plan means that you've got a trading strategy or a trading plan that you follow and remove emotions out of it. This also means that you are consistent in following that plan every time, all the time, and you always revert back to the plan whenever there are inconsistencies in the market. Stick to your trading plan. This will help you keep your money safe and grow your wealth in time. The fifth is ignoring your risk tolerance. Now, this is very important. Now, before you can enter into any trade or before you start your investment journey, you need to know exactly how much are you willing to lose. Most of the time, the advice is that do not risk money that you are not prepared to lose, because there is a lot of risk involved. Although we know that there are risk management tools that you can use, chances are that the market can go against you. Remember, you and the market are not friends. The market does what it wants. The market decides to do what it wants. Therefore, in such a case, you always have to make sure that you know your risk tolerance. Knowing your risk tolerance means that you are one of those people that will not get involved in panic selling during a downturn. So therefore, the tip here is to make sure that you know your risk tolerance and choose investments that align with your risk tolerance. Make sure you do this, is very important. I know that these are not the only mistakes that you can make when trading. I'll leave below a checklist that you can download for free to see exactly what sort of mistakes people are making out there, and also what you can do to avoid those mistakes. Please go and download for free the checklist for mistakes that you can avoid when you're trading, and the kind of tips that you can use to make sure that you avoid those mistakes. I'm also interested to hear from you. What sort of mistakes have you made when you were trading, and exactly what kind of tips or what kind of strategies did you use to get out of those mistakes, or what kind of knowledge can you share with the rest of the community on this particular channel? Always remember that early preparation equals excellent results. This is Friday Money Matters. Please like, share the videos, and subscribe if you have not yet subscribed. Thank you for watching this episode. We'll see you in the next episode. Friday Money Matters, all about money. Bye.